How to measure dollar strength? Dollar strength is measured by the currency strength meter by comparing the price between major currency pairs and showing the dollar strength as a bar chart or a line chart. Well, how do you know if a dollar is strong or weak? You will know the dollar is strong when you see currency strength meter is showing dollar strength rising, or currency pair price of US dollar against any other currency is rising in value. You see GDP and interest rate of USA is rising in value, or you can buy more foreign currencies than before, and goods in another country looks cheap. Here is a more detailed explanation of each of the above listed points. What you can see in the image is that US dollar strength is at the top. That means the US dollar is at the moment the strongest currency compared to others on the image. The currency strength meter has taken the current price and compared it to the previous period. The result shows that the US dollar strength has increased compared to previous price. And when the US dollar is checked against other major currencies, the results are positive for USD. Let's check the case when US dollar against any other currency is rising in value. In this case, I will show you how the market looks when the US dollar is rising in value against other currencies. What you can see here is that the US dollar is strong against other 6 currencies. The chart shows you on the left side US dollar as a quote currency, and the price of the forest currency pairs where the US dollar is a quote currency will fall down if the US dollar is strong. This is like this because, for example, Euro-USD pair will decline in value when the US dollar is strong. That means Euro will lose in its value and will become weaker. So the price of Euro against the dollar will decline. On the right side, you have the US dollar as a base currency. And the price of a currency pair, where the US dollar is a base currency, will rise in value if the US dollar is stronger. The price will rise because when you have USD-CAD pair, that means USD will become stronger and Canadian dollar will lose its value and will decline. Let's check another case, when GDP and the interest rate of US is rising in value. Here I will use an example when the GDP of the US is rising, so you can see how the news about the GDP affects the US dollar. And that is, when the GDP rises, the US dollar strength will increase. The chart shows you how the price of a Euro-USD currency pair is rising and declining in value. That means Euro is losing strength and US dollar is gaining in strength. Because of positive GDP news for US dollar, strength rises. Let's see what happens when interest rates impact the US dollar strength. In this case, you can see when interest rates of US dollar declines, which means US dollar is losing the strength. The rate has declined from 1.75 points to 1.25. The chart shows you that Euro is gaining strength against US dollar and the price of a Euro-USD currency pair is rising. Lower interest rates for US dollars makes the dollar less attractive to investors, so they move from US dollar in more attractive currencies. Because investors will make less money with lower interest rates. With money going outside of the US, the dollar becomes weak, and that weakness is visible as the Euro-USD pair price is rising. Let's check what is the dollar strength today. Dollar strength today is available on the Currency Strength Meter website, which has a live value of $1. The link to the Currency Strength Meter is below this video. The strength of a dollar is refreshed every day, so you can be sure to have the last information about the dollar strength. On the Currency Strength Meter website, you can find the strength of other major currency pairs, which are refreshed every day. If you want, you can calculate the dollar strength on your own. To do that, you need to find the strength of a dollar against other major currencies. Those are Euro, GBP, Australian dollar, New Zealand dollar, Canadian dollar, Swiss franc and Japanese yen. When you combine all major pairs with the US dollar, you should use the last 50 daily candles and check the price of each currency pair today and the price 50 days in the past. When you have those two prices, you can calculate the difference between them in percentage. You will get positive or negative value, maybe 1.2% positive or negative 3.2% as an example. Have in mind that US dollar should be base currency so you get correct values. And to do that on Euro-USD pair or any other where USD is on the second place, just switch the places and the price will be equal to USD divided with Euro equals to 1 divided with Euro-USD. Here Euro-USD value will be the price on the chart you see. And when you calculate USD price change with all major pairs, you need to find the average strength of the dollar. If you need more help about calculating the currency strength, I suggest you visit the page below this video. Let's check what determines the value of the dollar. Value of a dollar is determined by the economic health of the US, and the health of the US is determined with the GDP, inflation, interest rates, employment and risk. If you divide into each of these factors, you would get this. GDP defines how the health of the US economy is doing. That the country is prospering or having problems growing and providing their citizens the resources they need. Inflation defines are the prices of goods affordable for the citizens to survive, or the price is too high and citizens have trouble to get the food and energy. Interest rates define whether the dollar is attractive to investors or not. Not attractive dollar will lose its value against other currencies because interest rates are too small and investors cannot make money by investing in it. Employment defines how the citizens work. Do they work or they do not work? Employed citizen is a happy citizen who can provide food on the table. Risk defines whether the citizen in the country feels safe. Unsafe environment for any citizen is a key to leave that country, which at the end will have impact on the US economic health and eventually to dollar strength. When you use all these factors into calculation, you will get the value of a dollar strengthening or losing the strength against other currencies. The currency that is attractive, strong, the economy healthy, citizens happy, investors happy to invest will make the currency highly valuable. Let's check why the US dollar is getting stronger. When US economic factors like GDP, interest rates, employment increase, the US dollar will become stronger against other currencies. Second case that can happen is when you combine the US dollar against another currency that is losing its value, and that means GDP, interest rates are declining, then the US dollar with strength will rise. If you look at the chart showing the US dollar against other currencies, you will see how the price of a currency pair is doing over time. It can happen that the price has spikes in price, which means something happened at that moment. News with economic data has an impact on the dollar strength, so you need to pay attention when news will be published. If the news is positive for the US dollar, then the US dollar is getting stronger. And if something bad happens in Europe, then the US dollar will become stronger currency than euro. If something bad happens in Europe, the investors will look for safe haven currency for their money. And that means US dollar can be that currency which will make the currency stronger. What country is the US dollar worth most? US dollar worth the most in these countries. The data were pulled from the bar chart website on December 2021. The calculation was done by comparing a price of 1 liter of milk in each country and then populating the table with the cost in the US dollars. What is the weakest currency against the dollar? The weakest currency against the dollar is Argentinian peso, where $1 is equal to 102 Argentinian peso. This is visible in the table where you can see exchange rates between the US dollar and other currencies. For $0.01 in Argentina, you can buy 1 liter of milk, which is the lowest price compared to other currencies. The US dollar is so strong against Argentine peso that you can buy a lot of goods and products for a small amount of money. For example, when you search a little bit over Google, what are the price of the houses in Argentina, you will find this. The cost per square foot for ready-to-move into houses ranges from $65 to $93. And if you take into account small prices for living, buying groceries, Argentine peso is the weakest currency against the dollar. Well, how do you tell if a currency is stronger or weaker? Currency strength meter shows you graphical visualization how strong currency is against other currencies. You can tell the currency is strong if the currency has high value on the currency strength meter and other currencies are weak. Second, you can tell the currency is strong if the price of one currency rises in value against other currencies. The chart shows you US dollar strength against other 6 currencies. The chart shows a currency pair with a US dollar in it. When you look into the charts, you can tell the US dollar is stronger than other currencies because the price of currency pairs is rising or falling down. In cases where the US dollar is on the second place, like GBP USD, Euro USD and Australian dollar USD, the price is falling, which means the US dollar is stronger, and the GBP, Euro and Australian dollar are weaker. In the second case, where US dollar is on the first place, like USD Swiss franc, USD Canadian dollar and the USD Japanese yen, the price of a currency pair is rising, which means the US is stronger than other currencies. How do you know which currency is stronger? You know which currency is stronger by checking currency strength meter visualization, where each currency strength is compared to other currencies. If the bar or line on the chart shows the highest value, then you know which currency is strong. If it shows low values, then you know which currency is weaker. Does strong currency mean strong economy? Well, strong currency means a strong economy because the economy defines whether the currency is strong or weak. If the GDP, interest rates, inflation, employment and other macroeconomic factors are bad, then the currency will not have backup in any way and it will not be strong. If you have all macroeconomic factors good, then the economy of the nation will be strong and consequently the currency will be strong. Let's check which country has the strongest currency. Check the table. Kuwait has the strongest currency against the US dollar, where 1 Kuwaiti dinar is equal to $3.30. Second country is Great Britain, which is the second strongest currency against the US dollar, where 1 British pound is equal to $1.32. Euro is the third strongest currency against the dollar, where 1 euro is equal to $1.13. Fourth strongest currency against the dollar is Swiss franc, where 1 franc is equal to $1.08. These values are based on the currency rates on December in 2021. What does a weak US dollar mean? Weak dollar means you can buy less goods for $1 compared to when the dollar is strong. For example, if you go to Kuwait and bring US dollars with you, then you will need to pay $1.69 to buy 1 liter of milk. But if you go to Argentina, you would need to pay $0.01 for 1 liter of milk. Weak dollar means you can buy less goods for $1. Well, is it better to have strong dollar than a weak dollar? Now, when you know what it means to have a weak dollar, now it is time to see if it is better to have a strong dollar than a weak dollar. Strong dollar means you will be able to buy more goods for $1. In the case of Argentina, where 1 liter of milk is $0.01, means you can buy 100 liters of milk for $1. This is great. Your buying power is high and you can buy many other goods because everything is cheap. But strong dollars for Argentina citizens and companies is not good. If a company from Argentina wants to buy a car from the US and a US company wants to sell their car to an Argentina company, that will be hard because Argentina does not have so much money to buy US cars. The Argentinian company's buying power with the Argentina peso is so low that they will need to spend a lot of money to buy a car. When you see this from that angle, you can see that a strong dollar is not better than a weak dollar. For you as a consumer who is buying goods from weaker countries is great because you can get more goods for less dollars. And also for US companies that want to buy material outside of the US, it's great to have a strong dollar. But for companies in the US, it is not good to have strong dollar when they want to sell their goods to them. There is a fine line between strong dollar and weak dollar, so every party in the goods exchange is satisfied. And for that there is forex market and central banks that control the price of currencies. If you like this video, check the like button and subscribe. See you on the next lesson.